Hi there, and thank you for joining us at PhillipCapital Market Watch. I'm Sze Han, Senior Dealer from PhillipCapital Contracts for Differences, CFD. Today, I'll be sharing with you recent market updates as well as sector and stock picks for current market conditions. On 28 April 2021, President Biden unveiled a new fiscal package aimed at strengthening the social fibre of America. This massive $1.8 trillion American Families Package has two broad themes. First, to improve access to education for preschoolers and college education seekers, and second, to provide paid leave and tax benefits for working-class Americans. The American Families Plan is the third in a series of ambitious initiatives rolled out by the Biden administration in the last 100 days. The second and third packages are still pending approval by the US Congress. If approved, the three packages combined will infuse a total of $6 trillion into the US economy to stimulate recovery and growth over the next 8 to 10 years. With the Biden administration so aggressively pumping money into the markets, it's no wonder that investors and economists are worried that this will spark widespread inflation. Already, we are seeing the price of raw materials across the board increasing at the fastest pace in decades. Besides huge spending by the US government, other factors contributing to the rallies in materials and commodity prices include growth of the US housing market, which is creating demand for timber and steel, the greening of many US industry, which is creating demand for lithium and rare earth needed in EV batteries and clean energy packs, as well as the rapid economic recoveries in China and Europe, both of whom are big consumers of raw materials. The US Central Bank is not letting up on efforts to help reinvigorate the US economy either. At the conclusion of the 2 days Federal Reserve meeting on 27 April 2021, Fed Chair Jerome Powell commented that while economic activities in general has strengthened, slack within the US labor market persists, and hence the need for the Fed to continue accommodative monetary policies. Chair Powell also reiterated that the current price increases seen in the markets are likely temporal and that the central bank will be willing to let the economy run hot for a while. The capital markets, however, feel that the combined effects of stimulus by both the US government and the US central bank will create rampant inflation and that the central bank may be forced to tighten policies sooner rather than later. This may explain why the yields in the bond markets have been ticking up and why stocks traded down despite huge earning beats. Beginning 4th January 2021, the 10-year Treasury bond yield had risen sharply from a base of 0.9% to above 1.7% within a short span of 3 months. And accompanying this drastic move is the shift in stock market leaders from high-growth, high-valuation tech names to cyclical and value stocks. With markets anticipating that the 10-year Treasury bond yield will continue to trend higher amid a macro backdrop of synchronous global recovery and reopening, it is likely that more and more investors will join the rotation out of growth and into value. With continued support from both the US government and US central bank, and with about 40% of the US adult population already inoculated, the US remains on good pacing towards recovery and reopening. We have the view that the US stock markets will continue to trend up but at a slower pace and with possible corrections of between 5 to 10% along the way. We urge investors to stay invested despite the volatility and to consider balancing their investment portfolio across 5 broad categories of stocks and ETFs as shown in this slide. And that's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what you think. What stock or ETF are you adding to your portfolio to maximize gains in the next few months? Leave your comments. Thanks for joining us and see you soon.